right, we'll kickstart this webinar. Thank you everyone for joining in. And we are joining on this Monday evening, possibly a long Monday for all of you. So thank you for joining in on this evening. Usually we have our webinars on the over the weekends, but today, 17th June, is a special day for GRIP. Today, GRIP turns 4. This is our 4th anniversary, and yeah, a journey of 4 years. A company takes this kind of a journey only with the support of users or customers like you. Um, and yeah, thank you for continuing the support. And just quick introduction, I'm the Chief Business Officer at GRIP, and Nikhil is the founder and CEO of GRIP. You must have attended a few webinars, but official introductions first. So I will come to Nikhil now. Nikhil, 17th June, a milestone date for GRIP. Um, how do you reflect back on this journey of 4 years? How do you view what we have done, what we have achieved, and where we are going from here?
Yeah. First of all, Vaibhav, it's absolute pleasure to be here on this milestone. Obviously, many more years to come, and I think there are two stakeholders that probably owe our biggest thanks to. One is definitely our users. Many of you are on the call. A lot of what we have been able to do at Grip in the last 4 years has come because you are so active and passionate with your feedback. You tried and trusted us when we were very young as a company, and you gave us an opportunity to scale the business, to move as the regulation and the environment moved. And we hope we have done a bit of our role in making sure your portfolios are healthier. I think the second stakeholders are always the team at Grip. We've had an incredible set of people, nearly 100 now, who have helped us build this business. Many of them continue to be there from the time that Grip started, and I think that's been a very special journey to build alongside them. Maybe a few milestones, and if you're a frequent user of Grip, you probably have seen these numbers, but I can't miss this opportunity to maybe just emphasize what we've achieved in the last 4 years. Most importantly, we got regulated. Many of you may have started your journey with Grip when we were still an unregulated or non-SEBI regulated platform working under the MCA regulations. But one of the biggest changes over the last 4 years that happened about almost 365 days ago was our license from SEBI. We were one of the first companies to receive the OBPP license to be able to offer you these products. We recently crossed a milestone of 1,000 crores in investments that have been done over the last 4 years. The last 12 months have been our fastest in terms of new investments enabled. And these investments have come from 25,000 users who have used the platform, and almost all of them continue to have an active investment. We're also proud today to be a fairly large share of the market. Grip today accounts for 12% of all bond and SDI transactions done by retail investors. We've seen this number grow. We were at 10% for April, and we're 12% we're 10% for April, 12% for May. And it's good to be able to see that we're growing fast in the market on the back of your trust and support. Finally, what excites us and continues to drive us is focusing on creating investment opportunities for you that are truly exclusive. 80% of the products that you see on Grip, SDIs for sure, but also a lot of bonds, are offered, created, diligenced exclusively, and brought to you on the platform.
Nikhil, just one point on this. So this 12% of total volume, I don't know if everybody understands the importance, and maybe you can add more to that, but really tells the story of how momentum of retail investors like you, like investors on this webinar and us, create this momentum, right? So now 12% of the orders or just on Grip are being done by investors like yourself. And that's how this story plays out.
Yeah, maybe I can just add another statistic that I find very fascinating. Since the OBPP regulation came into play, retail investments used to always happen in bonds, but they used to happen through something called the OTC market. which was not very convenient, right? So what OBPP really did was to make retail investments convenient. It made it safer to invest. Since the regulation came, retail investments have increased 650% annually. And that's sort of the in the wave that your investments are creating. With the new regulations of bond prices or bond units being available at 10,000 rupees, we expect this industry to continue to grow at a similar pace.
Do you think transparency has also played a role in this in
For
terms of, like how the OTC trades were being done and how it is being done today from, OBPP platforms?
Yeah, I think the equity markets, and there's been a lot of chatter about how the equity markets in India, technology-wise, are ahead of almost every market in the world, including the US. Things like T+1 settlement, T+0 settlement. And I think equity investors in India have rightfully demanded the same quality of experiences, including transparency, when it comes to the bond markets. So having the OBPP framework that allows you to know exactly what you're buying, making payments to the stock exchange, getting units credited from the clearing corporation, and having it done in T+1 settlement has been a big factor in driving adoption for bond markets. Maybe I'll move to the next slide. And again, very core to our philosophy from day one at GRIP, we've always wanted to offer investments or investment options that met everyone's objective of risk reward. All of us on the call may prefer differently to invest in bonds or SDIs. Some of us may want higher risk, some of us may want lower risk. And at GRIP, our objective has been to ensure that meeting a certain quality threshold, we're able to offer you all of these options. Today, products on GRIP range from AA plus to BB, from 10% to 16%. And we will continue to ensure that we're covering the full range of the credit, risk, return, and tenure spectrum.
And may I just add, one of the axes that are missing here is the tenure. So these products also range from a tenure of 9 months to 24 months to 36 months. And that has also been one of the prime investors' consideration, that we want to invest in different instruments at different tenures. And I think that's also something that we have been able to offer pretty consistently.
Absolutely. One of those products that we've been able to leverage to bring that is really the SDI. And today, if you've heard about the SDI investment as an option in addition to bonds, you've probably heard it because of GRIP. We are very, very proud for the fact that we brought SDI as an investment option for retail investors. We continue to be one of the only platforms making this happen. For the financial year 24, ICRA reported data which made 66%, so 2/3 of all SDIs done in India were done by GRIP. If we add data for the last 2 months, for the financial year 25, this number is closer to 75%. So GRIP continues to stand for making institutional investments like SDIs available to you at small ticket sizes. And we will continue to add that diversity of risk, reward, tenure through products like the SDI. Maybe just one last slide on the look back journey. In addition to products, we've also been very focused on bringing features and propositions that have been helpful to address customer pain points. It could be the integration we did with NSE, which on 6th October 23, we were the first platform to complete the integration with NSE under the OBPP framework and make payments seamlessly possible, even for a 1,000 rupee transaction. Prior to that, users had to actually go and do an RTGS or NEFT with minimum transaction sizes being 2 lakh rupees. With the NSE integration, you could do the transparency that Vaibhav talked about, but you could also transfer any investment amount directly through a payment gateway. We already spoke about the SDI, which brought you a wide variety of risk and reward. And lastly, many of you must have tried this. We launched this feature in Feb with a second and enhanced version last month called Aftermarket Order that allowed you to invest 24/7 on holidays, weekends, or aftermarket hours. The fact that you are able to invest today, which happens to be a holiday for NSE is a testament to the AMO feature that we made available.
So just and I'm seeing from some of the questions that there are users who have joined probably their first webinar or have not invested yet. So just going back to NSE linked payments, this is a feature where your money, when you invest, your money directly goes to the stock exchange, and the securities or the investment products that you are investing in are directly credited from the stock exchange to your Demat accounts. And that's what we mean by NSE linked payments. And this is something that GRIP was the first one to do. Of course, it offers transparency, but more importantly, it also provides a different various kinds of mechanisms to pay, including UPI, which is much easier than RTGS or NEFT. Okay. Moving on. So, Nikhil, we have hundreds of people on this.
Yeah.
Okay. Yeah.
Maybe, sorry, I couldn't resist. Just one last slide. And this is thanks to a completely independent party running a survey. I think all of that, all of the features, all the products have allowed us, and thanks to you as users, to vote for GRIP as the preferred OBPP partner. 66% of people on this survey said they use GRIP for their OBPP or bond and SDI investments. And I think we're very proud of having achieved this milestone. We will do much more in the year to come by and subsequent years to make sure that we continue to remain the preferred choice.
Okay. So we have hundreds of people on this call on a Monday evening, and this webinar cannot be just about a GRIP update. I think most people already know about GRIP and what it does. So on this 4th anniversary webinar edition, what do we have in store for our investors?
Yeah. Before I speak about baskets, and you can see the logo on the page, I'm going to run a small video, and hopefully we can begin the understanding of what baskets is and why we are so excited about it through that video. Weber, you let me know in case it doesn't play properly.
Yeah.
I think that video did a lot of the talking, but very excited to launch this feature. It's been something in our minds for a long period of time. A lot of things had to come together to make this happen. We'll definitely spend time on each of the different things you saw in the video, on why we did it, what does it mean for users. But I'll let Weber take the lead on that.
Yeah. Okay, video did the talking, but it did the talking at a very fast pace. So could you just walk through on, like what is basket first?
Sure. So maybe I can talk about, as part of that answer, why we thought about baskets, what is the feedback that we got from users, and then I'll explain what baskets are as well. Maybe one clarification: basket is not a new product. It is based, or it includes bonds and SDIs. It is not a new financial investment option. It is a new way to simplify your investment journey when it comes to bonds or SDIs. Our users told us these 3 problem statements. Number 1, I can see a bond, I can see the rating of the bond, but how do I know that it meets my investment objectives? Every investment has to meet an objective. It is not about the investment itself. And how do I decide which bond meets that objective of mine? It could be higher returns, it could be more safety, it could be lower tenure. Can you help me make that decision easier? Number two, on a lot of platforms, including Grip, there are many times 20 different bonds available to invest in. And I don't necessarily have the time to research each bond. There are nuances to each bond, and I either I don't understand it or I don't have time to figure out which is the bond that I should purchase, once again, which meets my investment objective. Third, I know it's important to diversify, and I can diversify by buying multiple bonds. But today, I have to pay for each bond individually. It's a multiple time journey. I select a bond, I pay for it. I select another bond, I pay for it. And that's the only way for me to build a diversified portfolio. It's too cumbersome. How can it be made easy? What Baskets aims to do is to address each of these three problem statements or pain points we heard from our users. Number one, explore themes. Instead of exploring or having to explore each and every bond, you can explore the theme that you're looking to invest in. If your theme is short tenure, there is a basket for it. If your theme is high returns, there is a basket for it. If your themes is gold backed loans, there is a basket for it. So you can now come to the platform, come to Grip with a theme in mind to say, this is what I want my money to solve for, and choose for a basket rather than have to search for individual bonds and then try to discover whether they meet your theme. Number two, diversify automatically. Each basket has between 3 to 5 bonds currently. Over a period of time, we will take it up to 10 bonds or SDIs. You can, as soon as you select a basket with a particular theme, you are automatically diversified. Your money is going into 3 to 5 different instruments and hence reducing the risk for you. Lastly, we wanted to stop it from becoming cumbersome. You can buy the entire basket, all the bonds or SDIs in the basket with a single click. One single journey, one single payment, and all of the instruments will get credited into your Demat account. So each of the problem statements that we had, we believe that we can address it by creating this theme-based investment portfolio called Baskets.
So, Nikhil, you have covered it, but I think it is like really important to understand why baskets. Okay, and I'll take an example and then you can chime in. But Grip today is anyway not a marketplace. Like we already have a curated set of bonds. We don't offer hundreds of bonds on our platform for a simple reason that we want our users to do easier decision making. So we already have a set of curated bonds, and then on top of that, we are offering baskets. So where does that fit? And let me just take an example, and I'll be answering the question also along the way, maybe. But for example, we have a curated set of bonds like a Navi, a Vivriti, and a Ugro, which are all A-rated. But still, I hear all the time from our users that shall I choose Navi or shall I choose Vivriti? Because they are all A-rated bond, A or above rated bonds, similar return profile, similar tenure profile. And in my mind, I think that's where baskets come in and say, hey, why don't you just take 1,000 rupee each and invest in a basket of these all three bonds, which kind of links back to your automatically diversify point. Yeah, but there still will be that question that, okay, there is only X number of bonds on the platform and then why basket? I have tried to answer it in my way, but if you want to chime in.
Yeah, so rating has been, or credit ratings, which is what CRISIL, ICRA, CARE assign to a bond, are obviously an effective way to judge the credit risk of a bond. And typically, if you're for bonds that have the same rating, the returns will be in a similar range. But at the same time, there will always be differences. So, for example, you may have one of those bonds, let's call it bond X, being someone which has a really short tenure of say 9 months, or one of those bonds being gold backed. Now you can choose A-rated bonds, but you still may not be able to meet your objective of tenure or a certain kind of security. I think what theme-based bonds or theme-based baskets does is to allow that simplification to happen and for you to automatically select what is the kind of objective you want to meet. Nothing stops you from going and selecting an individual bond and putting 5,000 rupees in it, 5 units, 5,000 rupees. Or you could buy a basket with 5 different bonds for 1,000 rupees each, which have a similar tenure, similar rating, similar return, and give you diversification. Vaibhav, I hope that answered the question.
Yeah, and we'll cover the Q&A at the end of the webinar. Please write your questions in the Q&A box and we'll take this. So automatically diversify. And I think when people think about diversification into fixed income or debt securities, one choice that automatically comes to mind are debt mutual funds, because essentially you are putting a fund manager and he or she is taking the decision on what securities go into that pool, and it is diversification. How baskets are different from debt mutual funds?
Absolutely. So, and this has been a key consideration for us as we thought of baskets. We obviously did not want to introduce something which is already available for investors, and we wanted to make sure that the product of basket adds value. I think from the face of it, from the first point to say, debt mutual funds are very interesting products. They're great products, and by no means are we trying to say that they are worse than baskets. I think it's about offering you a choice of what you're looking for, and hence giving you the choice between baskets or debt mutual funds. I've tried to capture a few key differences here. Number one, baskets don't come with any management fee. There is no annual management fee at all. Debt mutual funds do typically charge a management fee, which ends up eating into your returns. The return range of a basket is between 10 to 13.5%, while as debt mutual funds are typically less than 10%. The key difference being what constitutes or what comes inside the baskets and the mutual fund. Baskets, most debt mutual funds are around the AAA range, focused on government securities, while as baskets introduced by GRIP have a variety of choices, giving you more range of returns. The third is volatility, and I want to spend a minute explaining it. In the concept of debt, volatility is odd. But when we think of a mutual fund, right, when you invest in a debt mutual fund, I'm assuming many of us have, your exit is linked to the unit price of the mutual fund. Whenever you exit is when you receive the returns. The unit price of the mutual fund can move up and down, even of a debt mutual fund, for a variety of reasons. It could be because of the interest rate environment. It could be because the constitution of the mutual fund has changed. It could be because there has been some payout, etc., etc. And hence, your exit of the mutual fund and your actual returns are linked to the time of exit. In the case of a basket, the basket constitution does not change. There is no movement up and down throughout the tenure. And if you're holding to maturity, there will be the same returns you receive to what you expected when you invested. And hence, there is no question of any movement in the price. This also plays into the next point on periodic returns. If you're a bond or SDI investor on GRIP, you have become accustomed to receiving monthly and in some cases quarterly returns of interest. This continues in basket. All the bonds and SDIs keep paying you monthly returns. However, in a mutual fund, returns do not come on a monthly basis. In most cases, you can choose in certain cases and then there is a tax application on it. But in most cases, your payout only happens when you sell your units in the mutual fund. The fourth point of difference is the transparency. As I mentioned, a basket is a predefined set of bonds or SDIs. You know exactly which instruments are constituting the basket when you invest. In the case of a mutual fund, that composition can change over a period of time. There are some very established guidelines on what is the kind of instruments that can be there, but those can change. The last point is liquidity. Today, a basket is not liquid. The bonds underlying the basket do not have tremendous liquidity, as is true for bonds and SDIs generally. A mutual fund, however, is extremely liquid. You can sell your units whenever you want. We're hoping to be able to solve that problem soon and come out with our liquidity feature as well. Vaibhav, if you'd like to add anything or ask any follow-on question.
Yeah, just on point number five, I'll just double click on that. So when you invest in a basket, you see a full disclosure on what the yield to maturity is or YTM is. And then if you hold this basket till maturity, that's exactly the returns you'll make. When you invest in a debt mutual fund, you are taking a decision on what kind of a debt mutual fund you are investing in. And then there's a fund manager who is making the decisions on the underlying securities on your behalf. The difference is that YTM on basket will be fixed. In debt mutual funds, it can vary depending on a bunch of factors. The decisions of the fund manager. There are also cases where fund managers change in a mutual fund, and then not so common, but also thesis of a particular AMC might change. This is not to say on this particular point whether basket is better or a debt mutual fund is better. It is again your individual preference, but it is a key difference that I wanted to re-highlight. Yeah, I think most others are pretty self-explanatory, but if you have any questions, please put in the Q&A. All right, so we saw what baskets are. Why do we believe that baskets are going to solve a bunch of pain points that we have repeatedly heard over the last 6 months? I'll just take a moment for Nikhil you to talk about what is the underlying process of how baskets work, and let me just lead with some of those things like who curates these baskets, how are the themes selected, how are the orders processed at the back end. Yeah, that whole journey which happens behind the curtains.
Sure. Perfect. So let me take it step by step. Um, the basket themes are actually thanks to you as users. The feedback that we receive consistently, whether it's through your conversations with relationship managers, email, social media, allows us to understand what is the themes that majority of users are looking for. And those are the themes that we design baskets on. For each basket, to decide which bond, which SDI goes into that basket, what is the level of diversification, how many instruments are there. We work with a SEBI registered research analyst who curates each basket and designs it. This is an independent SEBI registered research analyst who works with us on curating each basket. Once this basket is curated, we list this on the platform for you to explore. So today on the platform, and we'll talk about some of the baskets. There are 5 baskets, each of which have a specific theme curated by a SEBI registered analyst. You can view each of these baskets and see the details. Depending on the basket you like, you can go and press the button invest. You'll be redirected to a payment gateway screen, and you can make a payment for the entire basket in a single click. So one click for the full payment. Using our AMO feature, you can invest 24/7, even in baskets. Your payment will go and the orders will settle on NSE. The same way as it happens for bonds and SDIs, the same level of transparency, the same level of security of having payments made to NSE and NSE settling those units into your Demat account. If a basket consists of 5 bonds, each of those 5 bonds will get credited to your Demat account that is registered with GRIP. And every month, you will receive a payout from all 5 instruments. That is the way the basket works. Just to pick up a couple of questions I saw on the chat. Each instrument, for example, a bond has a TDS and a SD has a TDS. Because the basket is nothing but a collection of instruments, the units will get credited independently, the cash flows will come independently, and hence the TDS applicable will be the same TDS as that of a bond or an SDI. By creating the basket, we have also allowed parity of tax treatment and no additional taxes or no additional TDS to be applicable to you. Weber, back to you in case you want to add something.
Um, let me. I just want to go back to my favorite question. As a user, can I change the weights in the basket?
Not
Okay,
not
let me just put it more elaborately. I like the basket. I like the underlying securities, but I want to change the weights in the basket.
Yeah. No, unfortunately, you cannot change the weights in the basket today. Each basket is selected based, as I mentioned, by a SEBI research analyst, which is a regulatory requirement. The baskets are have to be bought together. That doesn't mean that you cannot buy each of these bonds independently on our platform and in a way create your own basket, but that will have multiple transactions. I can tell you that Weber has been very keen for users to be able to create their own baskets. It's something that is in our roadmap. It is also in our roadmap to work with a large number of SEBI registered analysts to actually create baskets by them for you and give you more options. So both the option of curating your own basket as well as giving you variety is something very much in our roadmap.
All right, cool. I don't see a lot of questions around the process, so I think we have explained that. But I'll wait for some of the questions to come in on the process itself. Um, okay, so we did launch Basket as a feature. Can you just can you just talk through our inaugural baskets?
Yeah. So as I mentioned, we picked themes based on what users told us, and these were the 5 themes that came across as having the maximum number of votes or requirements. Maybe I can talk briefly through it, and Weber, I'll maybe request you to pick up a couple of baskets and dive deeper in them.
Sure.
First was a high rated basket. So obviously desire for investing in more secured baskets which were rated A and above. High return, which meant they were the baskets that gave the best return. Gold shield were baskets which were backed by loans of gold. So the desire was, I want, gold is an attractive asset class. I want to have some exposure to it. Ultra short tenure for investors who are looking for shorter terms, and digi loan for investors who are looking to participate in the new age of fintech based lending. So these were the 5 baskets that we, or 5 themes that came to our attention, resulting in our inaugural baskets. As I mentioned before, we will add to these. Uh, we will add to these from a number of bonds. We will add to these from introducing SDI baskets. Very soon, you should have an SDI plus bond basket, as well as a basket curated by external SEBI registered analysts who give you more options. And finally, for Webov's benefit and Webov's request, baskets that you can curate yourself and change allocation of.
Yeah.
Webov, if you maybe spend time on a couple of baskets, please.
Yeah, just one thing to add. Can you just so so one Nikhil covered. These are 5 baskets of only bonds today, but in the next 24 to 36 hours, we will also have our first basket of SDIs. Um, Second, and just this is a trivia information, we launched Basket on the platform, but call it like a beta launch or an organic discovery mode launch. And we were very, very pleasantly surprised that since that day till today, 30% of our orders came in Basket, which and that just gives us that validation that we might just have struck a chord with our users' pain points. Um, Okay, so going forward, of these 5 baskets, I'll pick 2 baskets. This one is one of my favorite baskets because while speaking to all of you in our other users, I think one recurrent theme that comes up is, can I invest in in only short tenure bonds? And it could also be like, I want to invest only in bonds which are lesser than 9 months, and that has and that has different motives behind it. Like you can almost call it as goal-based investing also, where you don't want to keep your money in savings account or FDs, but want that liquidity after a certain period of time, which is lesser than 12 months. And that's where we created this basket. This is we call it ultra short tenure basket. Ultra short tenure is in context of bonds. A 9 month tenure would qualify, I think, as ultra short tenure. Here, the basket has the maximum tenure of 8 months, under which three bonds, as on the screen, are the underlying bonds: Akara, Indilmoney, Clicks. If you go on our website, you will have a description of all three bonds separately and in a concise fashion. The individual pricing or YTM of these bonds will also be there. And the final YTM that you see is just a blended cash flow pricing of these bonds. In this particular basket, this is an 8 month tenure basket, resulting in an 11.5% YTM. Again, the theme is so the basic theme of this basket is tenure. If we go to the next basket, this is really a theme, right? This is a basket, we call it Gold Shield. The theme of this basket is that the underlying bonds are all from the NBFCs, which provide gold backed loans. So in a way, the security of all these bonds is provided by a gold as collateral. The three underlying NBFCs in this are Kirtana, TrueCap, and Indilmoney. On the parameters, this is a 34-month basket with a 13.1% YTM. Same logic, please go on the website, check the basket, and you will find the details on the individual bonds as well. We have not put another basket here, but one of the basket that maybe Nikhil, you can go back to those 5 baskets. Just wanted to talk about the high rated basket also. So that high rated basket is all securities which are rated A and above. So again, that's kind of the thesis of our spectrum, where you have a high rated basket, which are highly rated bonds, and then there is a high return basket, which plays on the theme of returns. Um, yeah, and please stay tuned for our first basket on SDIs. Okay. Nikhil, you want to add anything else, or shall we move on to Q&A?
I see a lot of questions, so happy to move on straight to questions.
Okay, so before questions, I will take, and it will cover a bunch of questions. We don't have the time to respond individually, but one is a lot of congratulatory messages on GRIP. So thank you again, all of you. See a lot of heartwarming messages on the journey. That is one. Second, I see a lot of today. Today I see unusually high messages on people saying that we want to start investing on GRIP. We need some help, maybe some explanation on a product, on the process, etc. I would request you to register on GRIP, which only takes your email and phone number, and go to your profile and find your dedicated relationship manager. They will be very happy to help you out immediately, or write an email on invest@gripinvest.in. Um, yeah, so those were the two generic uh, questions that I see. Let me just pick up now more pertinent questions on basket. Changing weightage, I think we answered that. Okay, good question. So Bikash is asking, are all the bonds in a particular basket having identical risk or security? Like all are senior secured, or few are senior secured and few are unsecured?
Yeah. So thanks for the question. Almost all, actually, all the bonds that we have done on GRIP are senior secured bonds, and to that extent, your investment in bonds across GRIP will be in that same category. When it comes to security in the form of the type of loans or the type of NBFC, there may be a difference. certain loans may be backed by, for example, gold. Some may be backed by, some may be personal loans. Some may be backed by, loans against properties. So I think to that extent, the profile of each NBFC will change, but the bond by itself, all the bonds are senior secured bonds.
Okay, there are some portfolio questions which I'll bunch together. Okay, I missed that, but someone said that you have the best portfolio dashboard on the entire OBPP community. Thank you so much. But there's a question on are other investments like SDIs and bonds have a clear visual on returns, mentioning pre and post TDS. For basket, there is no mention of TDS. Is
Got it.
uh,
That's a fair feedback, and we'll make sure that the visualization provides you a breakup of TDS as well. But as I mentioned, the TDS for bonds is 10%, and that is same applicable for any bonds in the basket. Whatever is the TDS for SDIs is 25%, and the same is applicable for TDS on SDIs in basket.
Parag is asking again a good question that Parag appreciates how we have so many choices and assets available. Uh, and I last checked and it was 21 live deals. Just worried if it has some correlation to the quality of assets. So while we are trying to give more choices to our users, uh, is there any compromise on the quality of assets?
Yeah. Parag, that's a really important question. Thank you for asking it. Absolutely not. So I would like to believe that Grip actually offers you the least number of deals as compared to most platforms. We try to ensure that every deal, not try, but we ensure that every deal meets our credit criteria or our underwriting criteria, goes through a rigorous process, and then comes on the platform. The reason that you see many deals and actually will keep increasing is that some deals are available in very large quantities. Maybe I'll pick Navi as an example. So Navi bond is available as for investment of hundreds of crores of rupees, and hence we can offer it over a longer period of time. While we monitor these NBFCs every quarter, it does not take us the same effort of creating a new deal. So not only do you have the option to constantly invest in deals that have been available, but we keep adding deals, so the number increases. We do try to achieve a good, healthy balance of giving you variety of risk return tenure without overcrowding the platform and making it difficult to invest. But you can be rest assured that every deal, we're not adding more deals just because we want to add them or because we are compromising on the credit criteria.
Prashant has asked, Vint is also a platform that provides for bond investments. Uh, Earlier, they used to link our Demat account, and now they have come out with their own Demat requirement that you have to create the Demat account under Vint itself. Does Grip also have that same plan?
Yeah. No, we don't. We believe that every user should have, and this is not I really don't want to comment on any other platform. We're just talking about what Grip does. The philosophy at Grip was that every user should have the choice of where they want to create a Demat account. Many of you are likely to already have a Demat account because you purchase stocks. And hence, we allow users to link any Demat account they have and use it for investments on Grip. So whether you're using Zerodha, Grow, Motilal Oswal, ICICI Direct, HDFC, anyone, you can just provide us the Demat account details, and that will be where all your bonds, SDIs, and baskets get credited. You do not have to open a new account on Grip.
Okay, bunch of questions, like a barrage of questions asking, and this is probably Nikhil, you and I should think about it. People are asking, we understand bond ratings, but how do we understand it better? People are asking, we have heard so much about your LeaseX, LoanX, InvoiceX. How do we understand them better? And some have requested to explain that on this webinar, but I just feel that we will not be able to do that. But for all of you, I've taken note, and we will probably have another webinar on just these things. Consider it like a master class, and we'll go through that.
Yeah. No, I think more education is required for each of these things. While we organize the webinar, I would encourage you to visit our YouTube channel. You can also visit the Discover page within Grip, and you will find links to videos or webinars where each of these concepts are discussed. Um, we also have several blogs talking about each of these different products, but we will certainly do another webinar on them. On the rating, especially, we have an incredible webinar that we did last year with the head of ICRA, which is a prominent rating agency in India. And I would encourage you to please look for that webinar and have a chance to see it, while we'll definitely do the masterclass.
Okay, moving on, there are a few questions on how the interest payments are going to happen through this basket of bonds. Can we have interest at the maturity? Can we have principal, like all that? Let me just take a first step. So, uh, basket is a curation of bonds. The both principal and interest repayments will follow the same cash flow as the underlying securities do. You are right. You're an anonymous attendee, but you are right in the sense that every the cash flow will follow each respectively from the underlying bonds. Okay, at least 15 questions on our favorite question every webinar. When is the mobile application coming up?
I've also keep answering that question by saying it is coming, it is coming, it is coming. But this time my answer is going to be a little different. We have started work on it. We started development work on it. There's a dedicated team at Grip looking only to work, which is working only on the mobile app. It is something which is now a priority for us to get done. As you can imagine, the last year has been focused on the integration with NSE. It has been focused on a better portfolio experience, making some of these features like baskets live. But now with those done, we are focusing on getting a mobile app out to you.
Okay, one pertinent question on just basket. In terms of yield, is there a difference if I invest in all bonds separately versus a basket?
Yeah. The answer is no. And actually, to address it transparently, when you go to or visit each of the basket pages on our website, we have transparently put the returns or the yields of every single bond that is in the basket. And if you were to do the maths on the cash flow basis, month on month interest and principal repayment, you will get to the returns of the basket. So in no ways are you disadvantaged from buying the basket as compared to buying all the three bonds. In fact, your journey is easier. So there is no difference whether you buy three individual or five individual, or you just buy the basket. We're not charging any separate commission fees or anything of that when you invest in the basket.
Okay. Some questions again on basket that are music to my ears are, do you have plans to make a basket of perpetual bonds? Do you have a plan to make a basket of state guaranteed bonds? Do you have plans to make a basket of GSECs? Maybe you can answer that, and then I will also weigh in on that.
I'll just go back to this slide. I can we can see the only space which is not covered here is this AAA A+ space. We did an experiment where we introduced the Motilal Oswal bond. Weber, you can correct me, it was an AA+ rated bond. We weren't sure, to be honest, how users would react to it because the returns were in the sub 9% range, but actually it got subscribed on day one. So having taken that feedback, we will be launching more bonds which are in the AAA to AA+ category. We want to cover the full spectrum of risk reward. And once we have those bonds, we will also introduce baskets on them. Be rest assured that if a bond exists, we'll make it happen on Grip. Obviously, to a certain with the meeting a quality threshold. And if the bond exists, we'll make a basket for you.
Yeah, on just that. So we are expanding the spectrum, but it is really what our users tell us. I think below 9% is something that we have not touched upon. And if I could, I would do the survey on this webinar. Like, can we do like a show of hands where people would like below like the range of 8 to 9% and would like Grip to offer those kind of instruments? Do people have permissions to that? Okay, I can see some hands. Yeah, if you would like to see opportunities between 8 to 9%, which will obviously be much higher rated, and people, how people are asking about, state guaranteed and government securities, then we would be happy to bring it to the platform. Um, okay. Basket versus small case investing comparison.
Yeah.
There's no question to that. It is, I think maybe the anonymous person is saying that it is similar to small case, which it is. But yeah, if you want to add something.
No, I think small case is a great product for investing in the equity markets, and I think it has helped a lot of equity investors begin their journey and to expand their portfolios using that. Several incredibly experienced portfolio managers now run portfolios on small case, and the baskets aims to solve a very similar need in the bond and SDI market. So, thank you for benchmarking us to a phenomenal consumer product, very much aligned to what we are trying to solve for a very different product class.
How do you make sure that the payment is credited to on time to every subscriber?
Yeah. So, one of the beautiful things about bonds and SDIs is, and this again goes back to one of the first points we made about transparency. In the case of each of these products, there is a third party trust or a trustee set up who is responsible for representing investors and processing payments to them. This trustee is in no way related to GRIP, and it is regulated by SEBI. They have to report to SEBI on a regular basis on their activities as well. This trustee is the one that makes payments to all bond and SDI holders and directly works with the issuer, the NBFC or the corporate, to make sure this happens. And these credits are made directly into a bank account. So, a dedicated professional agency whose sole purpose is to represent your interest and make sure your payments come on time is responsible for this activity.
Okay, I see a question from Kamal, but maybe I'm not able to understand. If we opt for monthly or quarterly payout, then what would be the payout is not showing at the time of going through the details? I'm not able to catch the question, but Nikhil, if
Yeah.
you,
No,
yeah.
I'm not able to either. Kamal, maybe you can help us with a retyped question, or you can contact us separately.
Okay, now some other, like again, these are broad level questions. What's the benefit of using bonds instead of SPVs to fractionalize your assets? I think this is again, what are bonds, what are SDIs, and then some details. Maybe if you want to like do a two line on that.
Yeah.
Uh, yeah, okay. And just
So,
also cover in case of default, what is the process of recovery? In case of secure, in the case of secured bonds, how the process is different, which is an easy answer.
sure. So, Raj, your question, I think, is about what is the difference in using baskets versus SPVs to fractionalize your assets. So, baskets is actually not a fractionalization tool. Baskets, and actually neither is bonds. We'll address it separately, but baskets is simply a way to create that theme-based investing and to give you diversification. The SPV as a way of fractionalization actually largely operates, and there are many structures of SPVs, but most of them operate outside the SEBI purview for retail investors. Even structures like AIFs, which is an SPV, or creating an LLP structure, do not operate or do not make it easy or regulated for retail investors to participate. And hence, true fractionalization cannot happen. Instruments like bonds, SDIs, do make that fractionalization process happen in a way that the ticket size can be 1,000 rupees, 10,000 rupees, or 1 lakh rupees. And hence, they are more effective when it comes to retail investors. SPVs can be more effective for larger institutional investors. On the risk side, in the case of, and I'll differentiate the treatment of risk or the recourse in the case of default for bonds and for SDIs. In the case of bonds, it's a debt instrument, and hence the NBFC or corporate which is defaulting will be forced to go through an NCLT procedure. The trustee will represent the interest of all investors, and the recovery from the NCLT process will be distributed to all investors. In the case of a secured bond, there are certain assets, it could be loans, it could be cash, that are assigned to bondholders. Through the NCLT process, those will be passed on to the investor to help them recover their principal or outstanding interest. In the case of SDI, things are a little different. In the case of any SDI, whether it is LeaseX, LoanX, InvoiceX, there is an incredibly and tightly defined pool of assets that are owned only by the investors. And in case that there is a default, the trustee on behalf of the investors will invoke those assets. It could be cash, it could be other forms of asset, and repay the investors. There is a clear first and exclusive charge on those assets from an investor point of view. Weber, would you like to add something?
No, I think that was fairly covered. A similar line question: how safe is our investments in baskets versus bonds? And in case of complaints and queries, is there any help available? So I would just reiterate, basket is a feature that addresses the points of research, diversification, and decision making. Everything else, whether it is, what is the security, how is the trade settlement process, what is the asset cover, what is the recovery process, all those things remain the same as are in your senior secured bonds. So there's no difference in those aspects. It is just, it's a better way of investing, and the back end process or the logistics remain the same.
Yeah, I would just add that the only difference is that a bond is, basket allows you diversification, which reduces your risk to some extent, but underlying instruments are still the same.
Bikash is asking, how do we know the weighted coupon rate of any basket?
Yeah. So Vikas, you can see the details mentioned at the bottom of every page on the baskets. I believe it also mentions the coupon rate. If it does not mentioning it for a particular basket, we'll definitely ensure that it is added. I'm certain that it provides the YTM for every bond.
So just because it provides the coupon rate, if your question is that specific, the memo says all the coupon rate of each underlying bond, that same coupon rate translates into a certain YTM, and the basket YTM is just a blended cash flow of the underlying bonds. There's no difference between that YTM and the basket YTM. Okay, two future-looking questions. Why don't you offer CDS for retail investors? Then we can invest in bonds with zero risk. And is there any plan to get fractional real estate deals back on grip?
Yeah. Mahesh, thank you for that question. I think the CDS is a very interesting instrument to help further reduce the risk of investors. I think all of these instruments are already fairly secure, but we can definitely further reduce the risk using the CDS. SEBI has become, has created some relaxation in the CDS instrument. We are exploring it currently and figuring out how regulatorily within our license and working with other regulated platforms or regulated agencies, we can offer the CDS. It's something that is being taken up as a project. I don't yet have an answer on the possibility of it for these products or within our regulated framework, but it's definitely an interesting option. We would like to present it in a way where users can choose whether they want to buy a bond with CDS or without CDS. So that's something on the lines that we are thinking. And hopefully in the next month and a half, we'll have visibility on how we can introduce this. On the second question of real estate, if I look at all the fixed income asset classes, commercial real estate is one asset class that I do believe is missing on our platform. Webhub, I, and the rest of the team are very keen to bring it back. It is something that we have offered in the past. As some of you may be aware, SEBI has come out with new regulations for the commercial real estate fractionalization industry called the SM REIT regulations. Some of these aspects are still under purview, may be likely to change to make them more adoptable by platforms. And we are keeping a close lookout for it. As soon as we believe that this is something that can be viably offered, we will definitely bring it on the platform. It's something on our roadmap.
Okay. One question now. I'm moving to questions which are not really basket related. Um, so this is a question on how we represent some of our metrics on various deals. And the last question is, please answer this question live. So and I would have really liked to call you by your name, but you're registered as anonymous attendee. So it seems like on different deals, we have different kinds of metrics published. And one of the question is like, why were the NPAs not reported in a certain deal? So why does it not follow a standard template?
Yeah, absolutely. So I think your philosophy of the question is absolutely bang on. The idea is to be consistent in the way that the information is reported, and to consistently provide all attachments, for example, credit rating, rationals, etc., for every transaction. In some of the cases, I can tell you that the information may not be available, right? For example, the company may have not audited the financials. It may be, we may have a prior period information, and that would be consistent across everyone else. The company has not released those numbers. And hence, that would be the only reason that we would not follow a consistent template. In some of the specific cases that you have mentioned, we can definitely have a look. There are nuances to each transaction. In certain cases, an entity is part of a larger group, and hence the comfort that has to be taken or should be taken for a transaction, the way it is structured, is from a larger group. In certain cases, as I mentioned, there are related party entities that have to be factored in. In certain cases, the disclosure is not provided by the company. So I think the objective is very consistent with what you're asking us to do, and that's what we follow generally. We will continue to make sure that there is no gap between how we report it so that users can compare like to like.
Yeah, you have already covered it. I would have just say, I was also going to say almost the same thing, that we really follow a standard template where it is almost like filling in the blanks for new deals, which I think the spirit of your question is. It is just that there are certain nuances where, a parent company, a subsidiary, or something else which is so specific or special about the deal is something that we add on to, which cannot be replicated in all other deals.
Yeah.
The second point is that maybe the data is always not updated to the last month. For example, we can provide a data till the last quarter ending March, but it may not be updated in certain ways, in certain deals till June. Still, what we want to provide is the latest updated data, and in some that's why there could be some discrepancies across deals.
I would just like to add that in addition to us providing the data transparently, the stock exchange, because each of these products are listed, and also the credit rating agency have very standard templates on the information they require to analyze it. And then we are required to make sure that information is available to them, all the same information. It then gets incorporated into the rating agency report or the investment memorandum. So whether it's a platform, the rating agency report, or the IM, this information gets followed against a standard template.
Okay, I think we are 10 minutes past our scheduled time. I'm done with all the questions. Thank you again, all of you joining in and staying patiently through the webinar. Hope all of you at least check out our new basket feature. Whether to invest or not is, of course, your personal choice. Yeah, have a good week ahead. Nikhil, if you have any parting thoughts, otherwise,
Just another note of gratitude for constantly trusting Grip, seeing our platform, coming on these webinars, giving us your feedback, and we hope to continue being able to serve you with the same level of transparency and trust as the last 4 years have been. Wish you all a great week ahead, and thank you for your time.
thank you, everyone.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks, including delay and or default in payment. Read all the offer related documents carefully.